It has been a rough day for Elon Musk. First, his little rocket ship blows up. Now we see that Tesla is down 10% on the day. Not ideal for Elon. We're going to talk about all of that and more on today's show. As we get going, hit that like button, subscribe to our channel, drop a comment. Love to hear from you. Nothing that Kevin or I say is financial advice. We are not financial advisors. We are a couple of economics nerds who love following the macro, love looking at charts, and love talking about this game that we're playing. So please do all of your own research before making any buying or selling decisions. Kevin, we called it last month when Tesla was over $200 a share that it was due for some sort of retrace. And boy, howdy, has it done just that. Sitting at about 162 a share today. Not looking great there. Earnings report came out after the close of markets yesterday. Not pretty. Income for Tesla down 24% year over year. And that is not ideal, my man.
Not at all. That's a terrible number. But yeah, we definitely called it. It was sitting, I think, 213 on a Friday show that we did about a month ago. And that Monday came out like 184 went down to. And today we're sitting at 162. Again, we talked about how big of a bubble this NASDAQ was. You know, it was a dirty bubble. Tons of tech stocks were extremely overvalued. And we got Jim Cramer saying that all stocks were nearly undervalued. We also had Jim Cramer this morning saying, I hope everything goes well for Elon today. Dude, just
I mean,
that's
they
a
should
death
just
sentence
call
right there.
I mean,
Yeah,
I don't know anything about rocket launches. Maybe this was inevitable. Maybe this is what they wanted to have happen so they could learn something. I don't think you want a rocket that cost Lord knows how much to build to blow up like that. But I mean, they probably should have delayed the launch. They should have seen Cramer tweeting and been like, you know what, we got to put a pin in this. We're going to come back. We're going to double and triple check our numbers real quick because that was just the kiss of death. And we're seeing Tesla stock down to 161. You know, the market is red overall. You know, if we look, the broader, you know, indices aren't too bad. Everything's down between 0.5% and 0.8%. But if you look at tech right now, it's getting beat up pretty good. Netflix bouncing back yesterday. You know, if you're a day trader, which I am not, but you know, I think we'll probably see a bounce off of Tesla tomorrow. Like this is just too big of a drawdown in one day. The numbers were, you know, earnings per share 85 cents came in at expectation. Revenue 23.33 billion came in right at expectation, but it was the net income number, you know, down 24%. Big thing there is the margins are shrinking with underutilization of new factories, higher costs of materials and logistics. We're seeing greater competition in the electric vehicle space. You know, Tesla had the head start, but they're having to now cut into, you know, they're having to cut their prices. Bundy, how we doing today? They're having to cut prices to compete with a lot of the other EV cars out there. So it's a rough go for Tesla. I think they're going to be fine long term. We talk about like buying dips. I do think that, you know, you're never going to time the bottom and it could go down more. I don't think buying at 161 is the worst idea in the world. Like I said, I think it'll bounce back. But yeah, it is rough out there. When you add in the acquisition of Twitter and how much that has gone down, I mean, Elon, he's going to be okay. I don't think you're going to see him driving for Uber anytime soon. But it's been a rough go of it of late for Mr. Musk.
Oh, yeah, 100%. I do think that Tesla still has a ton of room to the downside. I think that's, again, in line with what a lot of the market still has to do. There's tons of retracements that have to happen. Again, we talked about a little bit of that retracement yesterday on our show of this bear market relief rally. But I do think that I wouldn't be surprised if we do see it after everything ends and we're at the end of this bear market, if Tesla's trading around $64 a share. It's a pretty big drop, but at the same time, it's not impossible. And I think this little dose of reality down from what, 213 to 218, where it was just about a month or so ago, to where it is now, should show you that anything could absolutely happen. And again, will Elon be fine? Yeah, he's going to be fine. Dude's got money in tons of other places. It's just what a terrible, terrible week, month, year it's been for this guy, going into what seems just like an inevitable disaster coming in the next few months too. So
yeah, and you know, add to it the fact that according to those who read the moon charts and everything, you know, it's eclipse season now until May 5th. So good luck to financial markets out there. It's going to be rough. Throw your fancy technical analysis and macro outlook just straight out the window, Kevin. We need to start looking at, looking up to the stars to seeing what we should be doing with our buying and selling decisions.
I will say this though. Did you see the tweet this morning from Crypto Man Ran? Is that why you're in reference to that? Yeah. Okay.
Yeah.
Here's the thing. I have no problem with Marin at all. I think it's pretty amazing how she's called a lot of things. Like if she's able to make money that way, God bless her. Like, you know what I mean? But this dude was shitting on Capo and all these other Twitter guys who were bearish for the longest. This guy would pretty much shield people into the Luna collapse. And now he's like, you guys shouldn't fade her. I'm like, dude, quit being a simp. Like, that's all it is.
That guy's an absolute clown. Between his simp post, the fact that he's constantly on spaces with Mario, and like all listening to occasion, this Rand guy is a bozo.
I would listen to Marin way before him though.
All around. Easily. It's the interesting thing with Marin. I've heard some of her calls, and it's interesting how it's always right around the time of like, oh, it's going to be bad. And it's right around when we have like a big inflation reading or something coming out. Yeah. That was very negative. It's like, all right, there's a cause and effect here. I don't think the stars are what led to CPI coming in hot. I just, to me, it doesn't make sense. I love how people compare technical analysis to like the guy's version of astrology. Looking at astrology. It's really funny. And it's kind of true. So you're basically an astrologist. Love to see that. Yeah. That was the only thing I was looking at. I mean, there's tons of earnings out there that we could pick through, but I don't really feel like doing that. I know you want to look at the charts. I know you want to talk about Bitcoin. Bitcoin has been on a bit of a pullback. Kudos to you. That was a great call on your short the other day. I believe you shorted Bitcoin when it was right around 30K and ETH when it was hovering just above 2,000. We're seeing ETH is actually holding up better today compared to Bitcoin. Alts are bleeding pretty bad right now. Also, one thing I want to bring up is you can see on the Dogecoin chart the exact moment that the SpaceX rocket blew up. It is, if you want to pull it up real quick, Kev, it's actually pretty funny because there was a big wick up, and then as soon as it blew, a big red candle going down. I love this game that we're playing. I love the Doge people and how just absolute love they have for Elon. But man, that is a very, very funny piece of data on the chart there.
100%. And again, you pointed this out to me. I wasn't even paying attention to it, but if we could, this is the hourly chart, and I'm assuming that the rocket probably blew up right around here. That'd just be my opinion, right? What time this morning? Yeah. So it's that hourly. Let's look at the 4 hourly just so we get a better. Yeah, there we go. So that's definitely
look at the 5 minute. It's ridiculous.
Oh, that's probably even further back. Yeah. It's got to be this one, right? Yeah. Okay.
Yep. Or no, it's further forward. It's further forward.
Oh, it's further forward. So it's got to be this one?
I think so. Yeah. So you can see right there. And down it goes. But yeah, alts are getting beat up right now. I think the alt run has come to a close. I feel like the meme coins are starting to dry up a bit. We've had Pepe go on an epic run. Maybe that one keeps going. It's funny though, they've had issues where they get their Twitter account suspended and the price tanks, and then as soon as the Twitter account is brought back, the price rips back up again. So I'm enjoying watching meme coin season from the sidelines. I just hope that no one who listens to our show, watches our show, gets burnt on it, because I think that it is going to be causing a lot of people to get their positions beat to shit here pretty soon. Like that, the money that people are making has to be coming from somewhere, and it sure as shit isn't liquidity providers of the token. So just be careful. It is a PvP market, has been for a while. It's intensifying even more, and don't get wrecked.
100%. I do want to pull up something from Twitter because I did send this out right before the show, and this goes in line with something that Rand said, also something that I said, and also goes into the shorts, the reasoning why I shorted the market. So this one right here, he said, encouraging to see that dominance is not increasing. This bounce will be epic for alts, but first, one more shakeout. Completely disagree with that. That is absolutely not what I think is going to happen. But I said, no bounce, just keep on rolling, baby. You know what time it is, because it's the truth. It's not alt season right now. That is 100% just BS. And if you're a huge Limp Bizkit
we had
fan,
like a week. We had like alt week. Okay,
yeah.
it wasn't a season. It was like a week.
I don't even think you can consider that.
I don't even. Yeah, honestly, it wasn't, because like it was just this time last week that we saw. I think it was like last Thursday night when we saw ETH rip up to like almost 2,200, and we had a few days where the alts, went on a run back when Link went up to like what 850 for a hot second. I'm looking at Link right now. It was up to like 880 for just a hot second, and all of that has retraced and then some. I think you have a lot of more bleeding to go. One thing I will say that has me, we've talked about Matic plenty on here.
Mm-hmm.
At a time when gas prices on ETH are through the damn roof, I minted an NFT this morning on Matic, and it cost all of 5 cents.
Wonderful.
It was very quick. Moving money from my centralized wallet over to, I keep a little bit over on Coinbase still, but moving some Matic over from Coinbase, took 30 seconds. It was super cheap. Gas was nothing. It was great. So Matic is going to pull back more. I still think I'm going to win that bet we have. And even if I don't, that's okay, because that means I'll get the chance to buy Matic at a very cheap price, and I am A-okay doing that.
Yeah, I think that I
want to win the bet because I want $100 of your money in my pocket, but I also want to lose the bet because that means the amount I would buy of Matic will far exceed what I will win in this bet. So I'm kind of torn right there.
So what you need is for the price to go down to like 31 cents on December 5th of 2023, and then the next day it goes down to 29 cents. So that way you get the $100 and you get to buy the discount.
That's true.
So
yeah, I mean, I'd be happy buying at 35 cents. I do think on a coming episode we should discuss kind of our strategies for the tokens we want to buy heading into the next cycle, and when, how we want to allocate our buys. Like, I don't know if you have it as meticulous as I do around like, okay, I'm going to allocate X% at this price level, at this price level, at this price level. But I think that'd be an interesting thought experiment to look into going forward.
Yeah, I completely agree. There's definitely some projects that I've been looking at. Again, I'm not in the mood to be deploying capital into some of them yet, just because if I'm going to buy them, I'm going to buy them dirt cheap. That way my money doesn't have to work nearly as hard as it has to when you're in a bull market and you buy it towards the middle or the top. But definitely that's going to be a great episode that we could do maybe next week or something like that. Yep. So again, going back to the reason why I shorted, I didn't short Bitcoin or Ethereum, but I did short at the level when they hit certain levels, because I knew that dominance was going to affect altcoins. So the 4 altcoins that I did short were Tron, Solana, Binance, BNB, and Cardano, which might be a surprise, but Cardano,
I do know how much you love Cardano.
Well, Cardano is my safe bet, because I knew that I still believe that Cardano is going to go down to below 20 cents. So at 44, 45 cents when it pumped up, I'm like, Bitcoin dominance is still 47, above 47 here. And I think that we did top out. Most likely it's going to go down. So even if it doesn't go down, immediately, which I don't expect it to, again, that's part of the reason why I got this chart pulled up. I do think that long term, that's going to be a pretty solid play. That Bitcoin dominance and looking at Bitcoin charts and seeing where it hit resistance, support, and all that stuff is definitely going to impact the alt market. And we can see that alts are absolutely bleeding because of it. So going into Bitcoin now, we are looking at something on the charts that's blue. And that is a pattern that I recognized yesterday. And this was literally as we were finished the show, I was closing the trading view charts, and I just said, this looks kind of weird. And I was actually on the 4-hour view. So I was like right around here. And I just saw this pump up here, and then I saw this up to here, and I was like, this looks like the top of something. And if it's the top, then what is this down here? So this was Silicon Valley Bank when the entire bank crisis was happening. Didn't break like we said yesterday, but it's definitely bruised from it, and we recovered instantaneously. So what I'm seeing is a head and shoulders pattern. And what we know about head and shoulders patterns is that they are bearish. They are pretty much, first pump comes down, then we get a second pump that goes higher, and then you get another pump, but it's equal to the height of the first pump. It doesn't go higher than this one, and that tends to lead to a breakdown. And this is on the 4-hourly. It was easier for me to see, but if we look at the daily, you can still see it. And if we go to the weekly, you might even be able to see it a little bit better. Yeah, so you're able to see it. So there's these like harsh lines in which you can kind of deviate what's considered to move up and move down, but then you start to see like this is where there's some exhaustion. Then obviously we talk about price manipulation pushing this up a good amount, and then again, FOMO from the banking collapse. But this is what I'm seeing all across, and I think here is where we're going to start to see this descent to the downside. And where is this? This could possibly be in May. I think that by May, we might get down to maybe this level right around here. I was talking about on the show yesterday that $23,000 level. There's a good chance that we could find a little bit of, oversold at this point on the weekly. This could easily come down if we start seeing some negative price action. Right now, we're under support for the weekly. This is the one I was telling you about the show. If we close below 28.3, there's a good chance that this move to the upside is completely over. Does it have to be? No, there's still a possibility that it could push up. But for me, a bearish engulfing candle at the top of a structure into resistance, it's a good chance that that move is over and we're going to continue with the trend, which I think is to the downside. This also coincides with that three-wave move that we were talking about, the ABC correction from the top of the market to the bottom. We're currently at the top of the B wave. And if this is the top of the B wave, obviously we're going to have to come down to, either lower lows or test the lows that already happened. And the structure right here of a head and shoulders pattern would provide that. We see that if it does follow the market maker pattern that it did here on the same way down, there's a good chance that, this is going to be extremely bearish. And by the time that we get to this point, this is what, July of 2023, it's going to play out a little bit further. I honestly think that this could be, it's weird because I'm also considering 2008, the financial crisis, where, we pumped into May, sold at May, pumped into like July, August, and then after that we sold. So if this plays out the same time horizon that this has, here we are March, there we are April, May, kind of a sell-off right here at the bottom. We rally into the summer months, maybe July, June, and then we come down again towards August, September, which is very similar to how it did in 2008. Does it have to happen that way? No, but I'm just very, adamant. I'm keeping an eye on that. Seems like the pattern that I'm seeing play out, but this is extremely negative and bearish, but this also gives you a ton of opportunity. So if this pattern does play out 100%, you know where to short and you know where to long. It just seems like a very market maker pattern. We've seen tons of manipulation from Binance and others.
Real quick.
Yeah.
I want to jump in real quick. With that timeline, and this is something we can talk about further, is the debt ceiling. And if you've been around the markets long enough, you've seen this play out time and again, but it still happens where inevitably they raise the debt ceiling. It always happens last minute, and there's always panic heading into it, and the markets go down. So it's like that's lining up. I think we got like 5 or 6 weeks left for the debt ceiling to be raised. And so, we'll continue to see, because no one learns, right? Like no one fucking learns. So we're going to see the same shit play out again, where the markets are going to react to this fear that the U.S. is going to default on its debt, which would be, put everything into shambles. But it's not going to happen. Mm-hmm. And the markets are going to bounce back. And that could be where we go into that second shoulder right there, maybe as we get through May. So I think that's also definitely lining up, because I see the debt ceiling being discussed a little bit, but those conversations always get more heated and get more attention the closer we get to the default happening. So just something to keep in mind and a date to keep an eye on, because that shit will happen again.
Oh yeah, 100%. Jay, I was absolutely right here. It just seems like, and here's the thing with the markets. If you're a Michael Lewis fan, he's the guy who wrote The Big Short. He believes that the markets are manipulated 100%, that the game is rigged against retail investors. I don't disagree with that. I think that, again, the game that we're playing not necessarily is 100% what's going to happen. It's thinking ahead of what institutional money is doing, or even acting how institutional money acts in the space. We respond to that sentiment. But if we look at this, with something like the debt ceiling, obviously I think big money knows that they're going to be fine, because they do learn, they do understand that this happens from time and time again. But retail investors who, start hearing crazy stuff like, oh, the U.S. economy is going to collapse, the dollar's going to go to shit, they're not sure really what to do. They're going to panic. They're going to fear. This FUD is 100% what drives the market and exit liquidity in this game. So that could absolutely happen. And then, everything's okay. So people start getting bullish, but then institutional money once again understands that, hey, now that liquidity is coming in, let's just drag it down one more time. And then we're going to, rally for so many years after, once we can buy everyone's assets extremely cheap. So that being said, that is the macro play that I'm seeing. I think that this is the way it's going to play out. I think that, again, Bitcoin and crypto might bottom out before the traditional financial markets. It just seems like there's a lot more. While there is more volatility, I think it's just there's a lot of manipulation that happens in this game. So it's easier to change the markets than it is in traditional markets, which have been established for so many years. There's just such a high pool of funds in so many of these companies. But with crypto, we're talking about average Joes, young kids, people who've never seen this level of money before. So once it starts going down, they might freak out. And this is new. Again, people always FUD crypto, but the end of the day, once the price starts going down and people are flooding it, you're going to get scared and you might sell off. So that's what I'm seeing with this in the macro. If we look at the daily real quick, because Bitcoin's actually dropping as we're talking right now, we're actually way below that level that I said we needed to. So as we can see, we've closed. Well, hopefully we close below this, because then that indicates that we're going to be going down. I do think we'll probably get a little bit of a relief rally coming in the next few days, just trading sideways maybe before we continue to break down. I think the next level of major support that we want to see is maybe right here, 26.5. Seems like a good amount of support on the daily. So 26.540. Again, I'm basing that off this, resistance right here. And then we found support on multiple occasions on this side. And we're talking about market maker patterns. These are patterns that play up on, they shoot up instantaneously, and they tend to play out the same way on the other side. Does it have to always? No. But if we're looking at this side, I would assume that we'd get something very similar on the way down. So this seems like a good level of support where we're probably going to, find some level of, consolidation before we make the next move to the downside. Because while the daily is oversold, and we're getting close to even being more oversold on the stochastic RSI, if we look at this weekly, we're just coming down out of this overbought, and we're still overbought as we talk. So after this weekly close this week, most likely we're going to be getting closer to this area where we'll eventually find ourselves oversold. And I think that's going to be right around here, right around this 22,800, 23,000 level. And then maybe we find, a few months of, rally back to key resistance, similar to what we found on this side, and then we make the move to the downside. But for the daily right now, this candle is pretty telling that we are going further down in the bigger picture. Doesn't mean that we can't, bounce here and there from the time to time. And again, I'm not even saying that this pattern 100% is valid. This could easily, screw everyone up and just go to 33 off one massive wicked candle. But I think this is the play. This is logically what the play is. But yeah, that's what I'm keeping an eye on. And I mean, again, this is pretty easy to follow if you are a trader and doing this. I personally wouldn't be telling you how to trade this market, but that's my plan. I'm just going to probably see how this develops. And if this does develop into a head and shoulders, then I know the game ahead of what most people are probably talking about.
Okay. Yeah, we're seeing a lot of red right now. And I'm like you, I'm not a trader. I buy and hold, and I sell and take profit. I'm not trying to trade these candles. So it's I think we're going to have plenty of opportunities ahead to accumulate at a much lower cost. And that's what my game plan is. So there you go.
100%. I'm going to take one last thing at Bitcoin dominance, because I just want to see how it's playing out. We're at 47.29. Again, I thought that we were going to have more of a rip to the upside. I still don't think that it's over. I think that, obviously this move from here to there is huge in how alts are acting right now, because everyone kind of put tons of money into alts, right? When the dominance was falling, dominance just pumped up just a little bit, just enough for alts could peel back. And Bitcoin, obviously the price came back too. And, it absolutely decimated some of these alts in the past 2 days. So I'm not too worried about that.
Dominance is looking pretty strong right now too.
Is it really having?
I think that's where, I think if you look at, you should look at ETH dominance, and then also the charts that our buddy Ace told us about, where it's just like everything but ETH and BTC. Yeah. Because I think that is where we're seeing, like, ETH seems to be, holding better the last 24, 48 hours than pretty much everything else.
Thank you for bringing this up. I just looked at this. It's another massive bearish engulfing candle. If this weekly closes It looks like it'll probably hit this resistance level or the support level here on the 200 EMA. But I mean, if this closes lower than this level right here, 377.795 billion, that pretty much telling you that this entire alt market is probably going to see some negative price action over the next few weeks, maybe into the next few months. This 50 into this 200 most likely will happen if this continues its descent. That's definitely something really interesting to keep an eye on. It just means that money's flowing out of these markets. And I think most of the big money that's flowed out of the markets already has. This is more of just retail money starting to be depleted and taken out from people who are betting against them. So definitely very interesting to see, these type of bearish engulfing candles, because, this could be the start of something extremely drastic on the macro.
All right, I think we are going to leave it at that for the day. I think it's a good cliffhanger. As we speak, we're seeing ETH is going to go below 1900 soon, isn't it? It's got to happen. If everything else is going down like this, we got to see ETH. We're about to see BTC go under 28. Yeah, man, it's Kesha time. All right, like
it's going down.
It's going down. Yelling timber. Watch out, everybody. Be careful out there. And once again, have cash on hand. Your best ability is your liquidity at this point. So have cash on hand. No, have your game plan. Like we said earlier, we'll talk about ours as far as like when we want to start deploying, and how we're looking at that. Because I think that's very important to have a plan right now and stick to it, as we've said over and over again, and we'll say it even more in the future. Like, we're playing the long game here.
Yeah.
We're not trying to trade this stuff to pay our bills this month. That's not the play. The play is to retire in 5 years. So that's what we're going to try to do. Less. Oh man. Okay.
Let's do it, man.
I need the bull market to come back, with a vengeance. I need to accumulate more Bitcoin and ETH before then, and I need my Nvidia stock to head to new all-time highs.
Okay,
that's what I need. So okay,
we'll start the bull run right here.
That sounds like a yeah. Okay,
it'll be us.
If only we could. Yeah, we're the market makers that are going to do that. So that is going to wrap it up for today's show. Thank you, everybody, for watching. If you have not already, hit that like button, subscribe to our channel, drop a comment, share us out. People you like. Maybe if you don't think we're very good, send us people you dislike. We'll take the views one way or another. But we'll be back tomorrow, same time, same place. Have a great day, everybody. We will see you next time.
Take care, everyone.